Our next guest is one of the most accurate forecasters of unemployment. Stuart Hoffman joins us now. He's the chief economist at PNC Financial Services. He's with us live from Pittsburgh this morning. And Stuart, you're saying you expected things to be slightly worse than they were, but you're actually finding a little bit more hope in these figures than many out there this morning.
Apparently I am, Margaret. Maybe I just woke up on the right side of the bed. But you're right. The measured jobs down 95,000 was weaker. It was weaker because state and local governments, particularly local governments, probably didn't recall a lot of teachers. We don't know the details, but I suspect that's the case. That's certainly the weak spot in the report. But private sector jobs were expected to be up about 65,000. They were right up at 64,000. There were small upward revisions to the number of private jobs added in the two previous months, July and August. And an alternative measure of jobs, it's in there. It's more volatile, so we don't pay as much attention to it. The household measure of jobs surprised everybody by showing an increase of 164,000 jobs, which is why the unemployment rate held steady at 9.6%. So, you know, on the headline, the news looks disappointing. When you peel the onion, I think it's more of a mixed report, and there's some strengths and some weaknesses. Bottom line, this isn't the kind of number that suggests a double-dip recession or that the job market is falling apart, even though the headline is jobs went down in the month of September.
But the interpretation in the marketplace seems to be what is clear from this figure is it doesn't rule out Fed action. In fact, it seemingly encourages this idea of quantitative easing happening next month.
I totally agree, and that's one of the reasons I think the stock market was initially down, and then as they read through it, they came back a little. This is a yellow light for the economy, to use, you know, that kind of analogy. A red light for the economy would mean double dip. A yellow light is still not good enough for the Fed. The Fed has said, or at least many Fed officials have said, the economy has to do better. This report is not as bad as it looks, but this isn't a breakout report. So more of the same is not good enough. Slow, sustained economic recovery in jobs isn't going to satisfy the Fed. So I totally agree that probably in November or December at their meeting, the Fed is going to launch so-called QE2.
And how big is that buying package? How big do you expect that buying package to be?
I suspect it'll be at least $0.5 to $1 trillion. I mean, it's possible the Fed would announce it in piecemeal and say, okay, we're going to do $0.5 trillion. And then in a couple of months, when it gets completed, they're not going to do it in one day. The day announced it is not the day they're going to complete it. So I think at least $0.5 trillion, maybe closer to $1 trillion.
Yeah.
Probably implemented in the first couple of months of 2011, because you can't buy that much in a day or two.